Hello traders, the title of the video is how to day or swing trade using Elliott wave forecast like a pro. Do you use the Elliott wave forecast for day or swing trading purposes, or do you want to learn to put into use your Elliott wave forecast for technical trading? In this tutorial, I want to share with traders practical tips and tricks that one can use to day or swing trade in a financial market using the Elliott wave forecast. As I've been telling traders in the series of videos that are titled Mastering or How to Become an Intelligent Elliott wave trader, all right, I was telling traders that we must use the Elliott wave principle like a tool instead of a science, okay? So I have one example here that I want to look at. So I have done my Elliott wave forecast, so you have to differentiate, okay, your Elliott wave forecast from, okay, a practical technical trading, which means you want to buy and sell in the financial market as a technical trader. But before that, you will start with your Elliott wave forecast. So you want to have a bit of idea what is likely to take place. Is it going to go up or is it going to go down? How is it going to go up and how is it going to go down? This is about using the Elliott wave principle to forecast the market. Now that you have finished, okay, to forecast the market, what is the next step? You want to day trade, you want to swing trade, you want to position trade. How do you day and swing trade using the Elliott wave principle? The reason why I'm recording this video, I know that a lot of traders very often, especially Elliott wave traders, very often will face that challenge. So they forecast the market, but sometimes that Elliott wave forecast does not help them to make, okay, profitable trading decision. Why? Okay, what do they need to do? All right, so this is what we're going to discuss here today. All right. So I'm on the monthly chart of the stock called Cognizant Technology, all right, Epic CTSH, Charlie Tango Sierra Hotel. This is an American stock, and I have done my Elliott wave forecast, all right. So you can see here, so trader was saying that, Joe, don't draw the line, just label it. I wonder how we can label the chart on the TC2000. If you have any idea, let me know. Can we write on the chart using TC2000? If you know it, let me know in the comment section. That's why I draw a line here. I remove my moving average 14. So they say that, oh, you have too many things. So I remove the moving average 14. So that was a good point. So I have here first wave. All right. I hope you can see on your chart. All right, let's zoom into it more. So this is the first wave, the second wave, a third wave. Fourth wave is a triangle, and the fifth wave has been extended, subdivided into 5 mono waves. All right. So from here all the way up here, we have the multi-wave. I can put a vertical line there. So this is the starting point, and our multi-wave has ended here. All right. Then we see the price structure that is developing. So at this point in time, or I'm choosing my word carefully, we see 1, 2, 3 down. So the first thing that is coming to our mind after we counted 5 waves and we see 1, 2, 3 is the flat correction. All right. So my forecast was that there is a high chance, not guarantee, no certainty, that this stock, okay, Cognizant Technology, has a high chance to go up. So we are forecasting that this stock will go up more, all right? And we also forecast how it will go up. There is a high chance that it will go up like this, 1, 2, 3. This is the forecast, all right? But the price does not have to fulfill our expectation, because the Elliott wave forecast is an expectation, is a guide, okay, that will help us to make the better trading decision. All right, though we have the forecast in place, all right, we have that expectation that the price will go up 1, 2, 3 more and continue to go up. All right, so we have an edge, and if the price is doing exactly what we are expecting, we'll take advantage of it. Now, how do we day and swing trade using that forecast? So now I have my forecast in place. As you can see on my chart, I have everything here. My forecast is completed. And I was saying to trader, if it comes up to the level of $85, it will come down again. 1, 2, 3, 4, 5. This is an expectation, all right? This is the forecast. Now we want to day trade. We want to swing trade. What we need to do in order to day and swing trade using the area wave forecast, we must now switch our attention to the price. So I have been talking about practical chart analysis, trading tips and tricks at 24 Stock Trader YouTube channel, a channel that I promised trader that I will make amazing. So the next step is to use what we call practical chart analysis. So how do we perform? How do we complete a practical chart analysis? We ask a 3 question. Where are we now? Where are we going? Okay, and what has happened before? All right, so check that video at 24 Stock Trader YouTube channel. I'll try to find the exact title to tell you now. Hold on, please, traders. So you may go and check out that essential tutorial about the title is revealing practical chart analysis tips and tricks at 24 Stock Trader YouTube channel. All right. So where are we now? We are at a resistance level. We have our forecast in place, but we are at a resistance level. So the resistance that we are talking about is this level of $70.27. Though our expectation that the price will continue to go up a little bit more by asking that question, by switching to practical chart analysis, the price is at a resistance level $70.27. As a day trader, we will say priority to day trader or swing trader, we say priority to, all right, bullish signal above $70.27 and priority to bearish signal below it. So today, if the market opens, all right, because the time in London now is 28 minutes past 1 p.m. on the 26th of July 2017, we will be watching this level. As a day trader, if we see bearish chart pattern here or bearish trading setup below the $70.27, as a day trader, we will be happy to take part into it, though we are expecting the price to go up because there is a resistance here. But if it breaks a buy from a higher low, or we see a bullish chart pattern above that level, all right, or there is a valid bullish trending setup above or in that zone, we will take it. All right. So this is about practical chart analysis using the area wave forecast. All right. Now, as a swing trader, because this is a monthly candlestick bar, personally, if you want to use the monthly chart for trading setup, one will wait for this monthly candlestick bar to close. If one does not want to do that, then one has to drop down to the weekly chart where a candlestick bar is already closed. So I'm switching to the weekly chart. So you see last week is this one here. So we can use the weekly chart because that candlestick bar is now closed at that resistance level. And we can, now the second candlestick bar is being formed here. The price is acknowledging that resistance, forming a kind of doji, but this weekly candlestick bar is not yet closed, but this one is closed. All right. All right. So the point I'm making here, though we are expecting, because you can forecast the market, but if you do not time the market correctly, if you do not apply what we call practical, chart analysis tips and tricks, one can, make a wrong decision. All right. Another thing that, so we are now at a resistance level. We are at a resistance level. All right. Other traders will also pay attention. They will say, all right, no more chart pattern trader will say, Joe, there is an inverted head and shoulder chart pattern being formed here. All right. So those traders will say, all right, if he breaks above that resistance level, using a conservative target, they will project it above the neckline of that inverted head and shoulder chart pattern. So those are the few things that we will do if we want to swing trade. Going now to the quarterly chart, can we see? I'm going to the yearly chart. I want to see where that target is. So it's somewhere up there by using the depth of that inverted head and shoulder chart pattern on the monthly chart is somewhere up there. Though we are using the area wave forecast, we don't want to ignore, okay, the practical chart analysis tips and tricks, i.e. asking the three questions: where are we now? Where are we going? This is about the target that other traders are watching. Though our expectation is that it will go up before coming down, we want to still use, okay, those, okay, tips and tricks, talking about practical chart analysis trading. All right. So it is one thing to forecast the market, it's another thing to time the market and to make excellent trading decision. So I want to talk about it so traders are aware of it, because sometimes traders say, okay, it's going to go up, or they say it's going to pull back a bit. But they will, like here, people will just sell. Okay, sometimes the price may not go up as we are expecting. It will just go up straight line without forming the pullback here. All right, so you are expecting it to go up and then to pull back and then to go up. But sometimes the price may not pull back like this before going up. It may just go up in a straight line like this. So as you are selling here, though your forecast is correct, you sell here because you're expecting it to pull back. It will not pull back. And then you lose. It's not good. You let yourself down because you know what is likely to take place, but you are forcing it. You are going ahead of the price. So the best approach is to take a step back, all right, and use practical, all right, chart analysis tips and tricks until the price confirm the expectation. Don't go ahead of the price. Wait patiently. Wait for a clear-cut signal. Ask the three questions: where are we now? Where are we going? And what has happened before? Talking about what has happened before is about where did the professional, okay, sell this stock before? Where did they buy it before? All right. So talking about what has happened before, we can start drawing trend lines. So now look at this. Can you see? Okay, hold on, please, traders. Hold on, please, because I want to close my indicators here so we can see the chart. So what has happened before? So answering that question, okay, I want to draw this corner, this point and this one here. I'm drawing a trend line, this point here and this one here, connecting them. Allow me to draw a trend line. So going to color that trend line now into pink. Pay attention carefully, my friend. That's it. What has happened before? People were selling on the edge of that pink trend line. They sold it here, they sold it here, they sold it here. Now we are again on the edge of that pink trend line. This is about what has happened before. So they were selling on the edge of that pink trend line, and they did sell it also at a specific price level at $70.27. So if you forecast that it's going to go up, don't just buy it anywhere, anyhow. Ask the third question: what has happened before? Okay, that will help you, okay, to use your area wave forecast, okay, more efficiently. All right, so we will say, all right, it's better to buy instead above the pink line and the red line. You see, that will be better because of what has happened before. Talking about what has happened before, all right, if we connect another. You'll be amazed. A lot of area wave traders will forecast the market, but they will end up losing completely. They will lose completely because they miss the next step, which is practical chart analysis. So connecting this point and this point here, allow me to draw another orange line on my chart, answering that question: what has happened before? They were buying along the orange trend line here. You see here, so you know that already. So here they bought it, here they bought it. Look, during the 1, 2, 3 of the flat correction, can you see? So as you see 1, 2, and then the third one is underway, you have counted 1, 2, 3, 4, 5 up to this point. Now you see 1, 2, the common center is kaput. You are saying, all right, probably is the A part of the flat correction. All right, by asking the third question, now you know that they bought it here. That's where the A part of the flat correction has ended. Will you agree with me for the first time in your life, all right, that by using practical chart analysis, by combining practical chart analysis with the area wave forecast, you will start using your area wave forecast more efficiently, more profitably. Yes, you will. Okay, see, here it is. It has ended here. The first part of the flat correction, the A wave of the flat correction, has ended at the point where the professional were buying the stock before. This is about what has happened before. We are now at a point where they did sell the stock before. Will it pull back now before going up, or will it break a bogey and find a support level? So you see now, all right? Another thing is asking again what has happened before. You can also use pitchfork tool. You can use the Fibonacci extension. We can use the Fibonacci extension to set a target. So where are we going? We can use Fibonacci extension, all right? Okay, so ask those three questions. Where are we now? Okay, what has happened before? Where are we going? Combine the practical chart analysis with your area wave forecast, and slowly but gradually, you will see that you will start using your area wave forecast, okay, more profitably. All right. So it will be completely bad for somebody who is more advanced trader who understands the area wave, has done the hard work by counting the wave, by forecasting the market correctly. But at the end of the day, that person will not get anything out of the market at all. That's very bad. That's very bad. Do not ignore also the market pattern. So talking about the market pattern, we talk about three market patterns. This is one thing that area wave traders are doing all the time. They are violating the market pattern. The market pattern precedes anything else. So whether you are using the most powerful trading system, you are using the most powerful trading strategy, if you are constantly violating the market pattern, you will just time the market wrongly all the time. All right. So we talk about the 6 biggest trading mistakes at dayprotraders.com. Check out that webpage at dayprotraders.com. The 6 biggest trading mistakes. So as you are using, you have finished to focus the market using the area wave principle. You don't want to repeat any of the 6 biggest trading mistakes. You see a trading setup, you will follow the trading tree, the setup, the signal, and the low risk entry point using a top-down trading method. You forecast the market, you will adhere to the trading triangle, the market first, the sector before the individual financial instrument. The S&P 500 will influence all the stock, the market leaders will influence the individual stock that we are trading. Okay, like this one belonging to the technology sector, you want to pay attention to Google stock and Apple stock, and also pay attention to the sector. This is the earning season, the economy news. Earning will be released, will affect stock. So you want to know what is happening, talking about the economy news, all right, and the fundamental. Those will also affect your area wave, okay, forecast. So once you have finished to forecast the market, you can congratulate yourself. You can be proud of yourself. But now take the correct step so you may get something out of your hard work. All right. So either for my blah, 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 I think I've said the most important thing to them. And I think you already understood what I've said. I want to communicate to them. And as always, for the first time, it may not make sense to you. You may think that, Joe, this is another blah, blah, blah. But let it sink in, all right? Digest it, all right? And just take the correct step. Anytime you focus the market, all right, and you end up losing, all right, remember this video and I'll start asking those 3 questions. It will start helping you to make the right decision. Those 3 questions, ask them on a higher time frame and then break it down to the lower time frame. Don't rush. It's quite exciting. The subject of area wave theory, the subject of market forecast, market prediction. Now you forecast it. Everything is working beautifully. Another thing before I close this video for area wave traders, very, very important. You want to mature as an area wave trader, you will always pay attention to the higher degree wave count. So now this forecast is on a monthly chart, okay? All right, now you see now. Let's continue a bit more. It's very, very important. So you focus it on a monthly chart. So we see 1, 2, 3, 4, 5 way all the way up here. We are expecting a flat correction. Let's go to the higher degree, which is the yearly chart, and see the bigger picture. This is another mistake that traders make as they are forecasting the market. So on a higher degree wave count, my apology to traders, I don't want to remove those lines as a trader has mentioned before. So you see, first wave, second wave, third wave, fourth wave, and the fifth wave, we are expecting a flat correction on the monthly chart. But on the yearly chart, don't be surprised what I said to you before. Anytime you are talking about a third wave, a first wave, or the fifth wave, those impulse waves can be extended. So, though we are talking about a flat correction expectation here, the market can change. The price structure can change, which means we will have to review our forecast on the monthly chart. What can happen is this. This will be the first wave, this will be the second wave, and this move that is going up now will be an extended third area wave, and this will be the first manual wave of the third wave, second manual wave of the third wave, third manual wave of the third wave, fourth manual wave of the third wave. So the first part of our zigzag pattern on the monthly chart will become the fourth manual wave of the third wave, and now our expectation to form another 1, 2, 3 up will become, it will not be 1, 2, 3, but it will be another impulse wave forming the fifth manual wave or the third wave before we will see the real third wave, the real fourth wave of the higher degree. And it will not be 1, 2, 3, 4, 5 wave down. It will be a corrective wave forming the fourth manual wave, forming the real fourth wave of a higher degree. So the forecast on the monthly chart is for the monthly chart. The higher degree will command, the lower degree, and the wave count and the area wave forecast is dynamic, is one step at a time. So the forecast is correct on the monthly chart, but if this happens to be an extended third area wave, it's not that your wave count is wrong or your wave forecast is wrong. It's just the market decided to print something else. So you put aside your expectation and you follow the price. Have I brainwashed you today? If I did, it's a good brainwash, don't worry. It will help you to start using your area wave forecast, more profitably. All right. So this will conclude this discussion today about how to day or swing trade, even position trade, using the area wave forecast like a pro. It is an expectation. One must now implement, a valid, practical chart analysis without ignoring the higher degree and the lower degree area wave forecast. All right. If you have any question or suggestion, feel free to put in the comment section. I always read all the comments. And in due course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another blah from your friend George, all right, or from your whatever, all right, let us know by giving us the thumbs down. If you think that this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to day or swing trade using area wave forecasts like a pro. Happy trading to you all and speak to you soon.